This week, we're going to talk about what I was interviewed on Business Times last week. Yes, take a look. Last week, I was actually interviewed by Business Times on why the fact that cash calls, particularly via private placements, as well as preferential offers, have resulted in big losses for investors in the last 2 years in particular. All right, so if you look at my article, you notice, ladies and gentlemen, that essentially, as much as 400 million has been lost in terms of capital loss. Now, how do you, therefore, as a REIT investor, avoid this kind of loss? Now, this kind of loss, ladies and gentlemen, you can see is ironically borne by the more learned investors, the so-called more sophisticated investors, who are actually your high net worth individuals, funds, because they are the ones that have been approached by the banks for the placement of the respective REITs. So how do you, therefore, as an individual investor, prevent such a loss? In today's video, this is what we're going to delve into. And as usual, do subscribe to our channel, smash our like button, do send us an email at GCP Global SG so that you stand to qualify to win a prize if your friend become one of our YouTube subscriber at the end of each particular month. Ladies and gentlemen, this is the first chart which shows the private placements done in 2020. That is 2 years ago. You can see that in 2020, there were 7 placements done. And guess what? Oh my goodness. 6 out of 7 private placements would have lost you money based on the price as of last month, end of last month. That is 28th of February 2022. This with the respective prices of the various REITs that did placement. This were their respective placement prices. And what is the verdict, ladies and gentlemen? You can see that, yes, 6 out of the 7 REITs that conducted their placements or private placements way back in 2020 would have lost you money. Now, the chief culprit would actually be Prime. Man, ladies and gentlemen, it's definitely not Prime, for Prime shareholders, who are still reeling from the losses on the placement price taken up at 0.957, because at the end of the month, Prime share price was only at 765. And what was Prime share price yesterday? Oh my goodness. Yes, lower, not higher. Now, so in our GCP Global classes, we were able to identify these potential losses. We've been able to basically steal most of our investor students to avoid this kind of losses. How can we do it? Do join us for our classes, because we go into this in detail. All right. Now, let's look at the next one. The next one shows, ladies and gentlemen, that there was even a greater amount of placements done in 2021. That was last year. In fact, if you count, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So out of 13, ladies and gentlemen, how many actually lost money? 1, 2, 3, 4, 5, 6, 7. 7 out of 13 actually lost you money, as of the price at end of 2022 versus the respective placement prices. Now, notably, ladies and gentlemen, you can see that, for example, good names like Maple 3 Logistics Trust, which the year before, that means, let me just get back to the previous slide. So the year before, they did a placement at 2.2023 or 2027 to round up. And the current price is at 1.75. So those who actually lost money, rather took up the placement, would still be reeling from the loss. And if they continue to take up the losses, or rather the placement, at 1.88, it was in 23rd of November last year, you notice that they are still sitting on the rate, which is essentially a loss position. Now, mind you, ladies and gentlemen, how do investing in good names, good name REITs like Maple 3 Logistics Trust, you can still lose money? Yes, ladies and gentlemen, making money and losing money, or avoiding losing money, is both an art and science, which we actually delve into in detail in our investment classes. So our next class is actually on 7th of May. So do sign up and join us on 7th of May. So essentially, ladies and gentlemen, if there's any guiding principle, as I've said in my interview, so in my interview here, this is what I've mentioned, right? I shudder to in conclusion, 20 placements conducted by S-REITs in the last 2 years, 13 have actually lost money, right? And what's important is that, I haven't even calculated the losses sustained by the investors that took up the preferential payment offer. Can you imagine? Preferential offer at lower prices, some of which were even done at the lower end of the trading range, 8 to 10%. You still lose money, right? Now, what is it that investors have missed out, when they actually size up the before taking the pricing for a placement or preferential offer? This is what I've mentioned here, and let me quote you in a bigger screen over here. One of the things is I have actually cautioned, as I've always done so in our classes and our media appearances, is that clearly investors have to be wary of REITs that sell their koyo, right? Remember, if you sell your koyo, you will always be highlighting only the positive points. But the REITs basically are doing their job. But you as an investor, you also have to do your job to analyze deeply to what extent do these acquisitions actually add value. Remember, the swan song that most of the REITs will tell you is that we have to grow, which means that we have to acquire. Now, you as an investor, your swan song should be, yes, you need to grow via acquisition, but do these acquisitions enhance my shareholder value, or do they only enhance the management fee for the REIT manager? Okay, now of course, no REIT manager will try to dispute you on this aspect. And of course, in our classes, we question for you whether in reality, most REIT managers are able to deliver the value post the acquisition, or are they in it only for the management fee? Now, the reality is it's in between, right? But therefore, to avoid losing money, the other thing that you have to be careful, ladies and gentlemen, is that acquisitions, when they are shown in the presentation slide by REITs to justify the acquisitions, they use both the DPU and the NAV. And they always look at the pro forma 12 months of the preceding year. And what is it? Now you as investor, ladies and gentlemen, have to know the follow through on assumptions whole. Okay, because when the REITs basically present their 12-month pro forma, it is their calculation. What is the assumption of the variables underlying the rental growth occupancy? It is the REIT assumption. Can you verify it as an independent shareholder before you take the placement? Hey man, think about it. The answer is majority no, because if the circular do come out, to justify a preferential offer, by the time you go through the almost 800 pager, you probably be more confused, and it's hard to even imagine that the answer as to whether the pro forma assumptions or the assumptions that underlie the variables that go into computing the pro forma numbers that help you to help the REIT to justify the DPU or NAV, whether it's accretive or non-accretive, that is actually up for debate. And that's why I've mentioned, ladies and gentlemen, in our classes, we watch this very carefully and we show you objectively which are the REITs that follow through in delivering positive DPU and NAV. Or is it the other aspect? That is, they only use it to sell their gold. Okay, now, of course, remember, after an acquisition, funds has been raised, years later, the REITs can say that whatever reason, be it COVID-19, be it the war in Ukraine, that those numbers have not been able to come in line, right? So the onus, therefore, is on us, the investors, to be wary, questioning the numbers before you put your hard-earned money into them. Okay, so gentlemen, we were interviewed in the Business Times, okay, and this is what we say, right? So in our classes, what do? We delve into the deep calculation of return on invested capital and enterprise value upon EBITDA to actually help us to look at the possibility whether the REIT is able to deliver on the numbers being presented. So this was the Business Times interview on 17th, of March, which you can go through, and you notice that we have actually shown to you, a very high profile case that is actually on ESR and ARA merger. That was last week. And of course, what happened? This week, ladies and gentlemen, we have good news for you. That is actually the ARA and the ESR merger. The shareholders on both REITs were smart enough and said aye to the union. So the merger of ESR, REIT, and ALOC is going to come through. I'm glad that many of you all have shared this video. Many of the ALOC shareholders have actually awakened up to some of the best value that you have already been able to attain through the merger. And I hope you and I wish you well in the coming years. All right, ladies and gentlemen, hope you have enjoyed this week's video. And next week, we're going to focus on another prediction that we have mentioned before and have come true. You can see this is our previous YouTube video where I've questioned the managers, and the underlying motivation on the MCT Maple 3 NAC merger. And look what happened this week. Finally, they heeded our call. They realized that the price and the options available in proposing to acquire or merge Maple 3 NAC was not the best value propositions. In fact, now they have given you a all cash option, but unfortunately, the price has not changed at 1.19. Now, in this case, is it really free for all? Or is it a case where actually the manager actually stands to benefit, even though they actually backstop the deal on MCT price at 2.0039? Because in our previous YouTube video, we also mentioned that the price of 2.0039 was based on one day, not a volume weighted average price, right? So in that case, but anyway, those are the details for next week, and hope you like it. Hope you would like and sign up for our next class, which is actually on the 7th of May, which will delve into detail all these issues, how to avoid losing money in REITs placement. Is supposedly to be smart money, but yet smart money lost up to almost 400 million in the last 2 years of down cycle, taking up private placements. And I've not even included essentially the preferential offering losses. Now, how to avoid that? That's what we're going to discuss in detail in our classes. And once again, you like our video, do subscribe and join us every week for a contemporaneous update on the latest hot issues on real estate investment trusts. In the meantime, stay safe, stay invested, and most importantly, stay invested in the best REITs.